Hey everyone, welcome back to Corporate Decoder. Today we are diving into AVITA Medical's proxy statement. Now I know what you're thinking, proxy statements. Sounds thrilling, but trust me, there's some juicy info hidden in these documents. Think of it as corporate spring cleaning, where all the skeletons come out of the closet. We will talk about director compensation, executive pay, and a whole lot of stock options. This proxy statement is basically the company asking its shareholders to vote on some key decisions. It's like a school lit collection, but with more money and less pizza. Let's see what's on the ballot. First up, we've got the election of directors. The company wants you to re-elect 7 people to the board. These are the folks who are supposed to be guiding the ship, so it's important to know who they are. We have Lou Panaccio, the chairman Suzanne Crowe, Jeremy Cook, Robert McNamara, Jan Stern-Reed, Kerry Vance, and James Corbett, who's also the chief executive officer. They are all up for another 1-year term. Digging into their backgrounds, you will see Lou Panaccio has been the chairman since 2014, and he has a long history in healthcare. James Corbett was appointed as president and CEO with approximately 40 years of leadership experience in the ocean. Robert McNamara is a senior executive with experience in medical devices. Jan Stern-Reed has legal, management and business leadership experience, and Kerry Vance has commercial and operational experience in the healthcare industry. The board seems balanced in terms of experience of Weckham Bakhtamara is a senior executive with experience in medical devices. Jan Stern-Reed has legal management and business leadership experience, and Kerry Vance has commercial and operational experience in the healthcare industry. The board seems balanced in terms of experience. It is important that the company says that Lou Panaccio, Suzanne Crowe, Jeremy Cook, Robert McNamara, Jan Stern-Reed, and Kerry Vance are considered independent within the meaning of NASDAQ listing rules. It's essentially stating that they are not controlled or biased due to their relations, whether that is a job or family or similar. Basically, they are supposedly impartial. James Corbett is not considered independent because, well, he is the CEO, supposedly impartial. James Corbett is not considered independent because, well, he is the CEO. The board has a few key committees like the Audit Committee, Human Capital and Compensation Committee, and Nominating and Corporate Governance Committee. Looking at the table, we see that Robert McNamara is the Audit Committee Chair. Kerry Vance is the Human Capital and Compensation Committee Chair, and Jan Stern-Reed chairs the Nominating and Corporate Governance Committee. These committees play important roles in overseeing different aspects of the company. Moving on to something that always gets people's attention, the money. Grant Thornton LLP is listed as the company's independent registered public accounting firm. And let's look at how much money they make to check the accounting books. The fees billed to AVITA Medical are shown here. Audit fees were about $723. Tax fees increased from about $37,000 in 2024, down from $775,000 in 2023. Tax fees increased from about $135,000 in 2024, down from $775,000 in 2024, down from $775,000 in 2024, down from $775,000 in 2023. Tax fees increased from about $135,000 and $25,000 to $25,000 and $20,000, to $75,000 and $25,000 and $275,000 in 2023. Tax fees increased from about $37,000. Let's take a look at who owns the most of the company, because big owners often have big influence. BlackRock Inc. is listed as owning 6.83% of the common stock, and the Vanguard Group owns 5.27%. Then we have the directors and named executive officers. James Corbett, the CEO, owns 1.19% of the stock. It's crucial to remember these percentages as these owners have bigger influence. Now let's get to the executive compensation. James Corbett's total compensation for 2024 was about $3.2 million. A big chunk of that is from option awards valued at around $2 million. David O'Toole, the chief financial officer, made approximately $1.7 million, with around $1 million coming from option awards. Nicole Kelsey's compensation was around $1.2 million, with almost $800K of option awards. Remember though that she joined mid-year. Now things get interesting. The company is asking shareholders to approve grants of stock options and restricted stock units, or RSUs, to the non-executive directors. We are talking about Lou Panaccio, Suzanne Crowe, Jeremy Kearney 5 options, which they say amounts to a value of $87,500 for the options based on the grant date closing price. Now these all vest after 12 months, so they got to stick around for at least a year to get them. And what about the CEO? Does the king get his share? Well, Proposal 9 asks shareholders to approve a grant of 520,000 options to James Corbett. These options vest over 3 years, so it's an incentive for him to stick around. Unlike what the non-executive directors got, the company needs shareholder approval here because Mr. Corbett is on the board. The non-executive directors make between roughly $84,000 and $123,000 per year in cash, and then they will also get the stock options and restricted stock units as well if approved. There is also an ask to approve the 20 Omnibus Incentive Plan amended and restated. This plan is essentially the company's way of issuing stock and option awards to employees, and to do that the company needs to increase the number of shares they can issue. If the plan is approved by stockholders, the plan will add 2,500,000 shares to the number of shares of common stock under the plan, for a total of 6,000 shares of common stock issuable under the plan. This means the company will have more ammunition to offer their employee and directors. They mentioned the 2-year average burn rate was 4.70%. This is a fancy way of saying that they have used about 4.7% of their total outstanding shares on equity compensation and plan on using more. So that's the proxy statement in a nutshell. A lot of asking to hand out stock to board members and the CEO, but it's important for shareholders to know where their company's money is going. And now let's zoom out and take a quick look at my opinion, which should not be considered any advice. Overall, AVITA seems to be following a fairly standard corporate governance structure. It has the compensation plan and structure as most companies listed on NASDAQ and ASX. As for red flags to look for, you can look at high executive payouts, and you can also look at what percentage of equity is issued to executives relative to employees. From the looks of it, AVITA is quite within what's to be expected. The biggest risk I think that would be on AVITA is not the corporate management, but rather if their product gains market-wide acceptance. If that happens, this stock will skyrocket, but if it fails to do so, then you might have yourself a problem. That's all for today's Corporate Decoder. If you found this breakdown helpful, please hit that like button, leave a comment, and subscribe for more deep dives into the world of corporate filings. Until next time.